Hello, everyone, and welcome to today's special webinar event. I'm Terry Ryder, founder of Hotspotting, and today I'm discussing how to predict real estate better than bank economist with one of Australia's leading buyers agents and also a best-selling author, Kate Hill from Adviseable. Now, the premise behind today's topic is that the key to success in property investment lies in identifying locations which will outperform the general market over time, and also pinpointing the right time to take action. And essentially, this means forecasting events in markets across the nation. But is this realistically achievable for the average Australian consumer? The truth is, anyone can learn the basic tools for understanding market dynamics well enough to determine when to get into the market and where to buy for long-term success. Indeed, the average consumer can easily outperform senior economists working for the major banks. And let's face it, that's not terribly difficult, given the poor track record of bank economists in forecasting house prices in recent years. At Hotspotting, we're immeasurably better at predicting markets than bank economists are, and so is our special guest presenter, Kate Hill of Adviseable today. Kate is one of the nation's best buyers agents and also the co-author of a very successful and a very readable real estate investment book called The Female Investor. Kate, welcome.
Hello, Terry, and everyone else out there. Thank you for the glorious introduction.
You're most welcome. All of it was true.
I'm sure, especially the bit about the economists, but more on that later.
Yeah. Okay, so as they say, we live in interesting times. You know, markets have been doing a lot better this year, haven't they, than their bank economists forecast. They were forecasting prices to drop a lot this year, and they haven't. They've actually been nudging upwards. And our latest analysis that we do of sales activity every quarter shows that there's actually quite a resurgence happening in some markets across the country. It's really looking quite promising.
Yeah. I feel like really at the moment, all I'm hearing is recovery and resurgence, and quite right, in some markets that is happening, but there are so many markets out there where it didn't actually ever stop. There is no resurgence because it never went backwards. So, you know, and then we come back to this inclination from the national media, the press, whoever that isn't you and me, then talk about, you know, the Australian housing market. And there is, on occasion, there is such a thing, but most of the time there is no such thing. So yeah, lots of markets have been ticking along and growing quite happily. Thank you very much over the past.
Yeah, I think if people can take away one or two really important points, one of them will be understand that we don't have an Australian property market. Yeah. At any point in time, it's normal to have markets that are rising fast, markets rising moderately, some that are stagnating, some are. We have that right now, in fact. And as you say, some markets never drop. Perth has kept on chugging along very strongly. So is Adelaide. So have some of the regional markets. But media does tend to generalise about the Australian property market. It's not very helpful.
They do. So I'm going to say a bit more about that as we go on. I'm sure we both will, because I'll bring you in to those things. So I've got some slides if we want to get going on this sort of stuff. Really the key to, I guess the main theme of the presentation and our discussion, if I can put it like that, is, you know, how do we get growth in property? How do you do it, like you said in your intro, you know, better than the economists? What are some of the key factors that we have to keep in mind? And I know I'm going to sound like a broken record, but a lot of these things they don't change over time. There are some really basic principles and fundamentals that are just, they're fundamentals. They're always there. So let me hang on, share my my screen with everyone. There we go. I can make that bigger. Is that all looking good, Terry, from your side? Fabulous. Yeah. Okay, so there's our little intro. I have to do, I'm afraid, everyone, the obligatory disclaimer that all this information shared is general. So not all of the areas that I do get to talk about once I've finished all my ranting are going to be suitable for everyone. Okay, so please keep that in mind. For those who don't know, how could you not know who I am or who we are? I'm kidding. We are buyers agents. We are independent, qualified investment advisors. That is really, really important to me, to our advisors. We're licensed in multiple states. It's also key to me. We don't pigeonhole you to where I am physically sitting because it's convenient for me. It's very much a customized approach to looking at what property in which state is going to be suitable for you. A little bit more on that later as well. Been doing this, I feel like, forever. I love it. And we are members of both PIPA and REBA. And like I said earlier, we are all qualified property investment advisors. So we are trained to talk to you and advise you in that capacity. There's a lot of agents out there who are not. Okay, so back to some basics, I guess, and I really want to put forward, how do we get growth in property? So simple, don't overcomplicate it. There's a lot of noise out there. There's so much airspace that is given to this topic, I guess, because it is Australia's biggest and most favorite asset class. So you're gonna come across endless amounts of content, including from me, about this. Really, again, it's back to basics, guys. It's demand and supply. That, to state the obvious, the balance has to be right. Okay, so and we are seeing this in a lot of markets right now. If demand outstrips the supply of whatever it is you're buying, you're going to need to pay more for that item in demand, and that equals a growth in price for the item, right? It's a very simple concept, but you have to keep that in mind as you are looking at areas that you are interested in for your property investment purposes. And really, you only need to answer those supply and demand questions, which is, why is there a demand in any given location? How long is that demand going to be there for? What is the supply going to be? And how long is that going to be there for? Really, that kind of covers a lot of those bases. And like I said, we are seeing that right now in Adelaide and Perth and other markets. But when you look at why those markets are, dare I use the word booming right now, it's not that hard. The demand is huge because they are more affordable areas. The yields are great. In the last few months, everyone's borrowing capacity has gone down. So it drives people into those more affordable areas. The loans are more expensive. Everyone's looking for good cash flow. The yields in those areas are awesome. So it is a little bit different. Obviously, there's regional variations for Adelaide and Perth, and the supply is different, but essentially geographically, they're both long and thin, right? But I mean, Terry, do you have any more insights? I'll talk a little bit more Adelaide and Perth later in our kind of little area profiles, but it's kind of easy to see why those two have received so much attention over the last few months.
Yeah, I'd just add the layer of what's going on in the underlying economy. For us, that's always something. Adelaide both offer that extra level of affordability, less than half the price of Sydney and Melbourne on average. But they're also underpinned by strong economies. South Australia is a much stronger economy than most people realise. It has a kind of a reputation of being a low or no growth economy, but it's not. It's actually ranked very highly in the State of the States report, for example. It's certainly come a long way in recent years, and it's a rising economy, and Western Australia continues to be strong. So, those factors are also important in creating property markets that are vibrant and the demand is strong because jobs are being created. And when that's happening, people are going to be going there to live and work, and for either rentals or for purchase.
Yes, absolutely. And I think, when you look at these sort of migration patterns that have been happening, even pre-COVID, pre-COVID, people were streaming into Southeast Queensland already. But, during COVID, certainly South Australia was a big recipient of migration influx. And obviously Perth had its ups and downs during that because of them shutting the borders. But that is definitely changing, as we speak, and I can speak from that sort of personally and anecdotally, people that I know that are moving, that have moved. So I guess, we then come back to what can stop us getting into the market and making those investments and procrastinating. It's a big thing out there. So here we go, exposing some myths and misconceptions out there. Terry, you and I both always have a lot to say on both the first two issues. They're sort of similar. The first one really is that this is economists know what they're doing, and they understand the housing market. In my experience, they don't necessarily do that. Obviously, they research what has happened. So historically, they love to make a forecast. I don't think we literally have time during the course of this webinar to go through, I'm not going to, don't panic, but to go through the sheer volume of times and the number of times they've gotten it wrong in the last 4 or 5 years alone. We can all think back to that time when they were making predictions of 20% and more, 20 to 30% drops in property values alone. But you have to remember why that's happening, why they're doing this. They're employed, they're employees, they're employed by businesses who need your attention. The banks, data providers, all those people, the economists and the media, for them, the market is always either going to be plummeting or booming. It's the only way to get your attention, again, because we're coming back to Australia's biggest and favorite asset classes. 70% of the population own a property. You're not going to click on something that just says, oh, the market's ticking along really nicely. And the fact that they change their tune almost on a weekly, sometimes daily basis, really depending on which data source they're using and who is promoting themselves at any given time. So don't forget why they do this. It's not always based on fact. And you shouldn't be using their opinions and their guesswork to really determine your investing success. I can't stress how important that is. If you listen to them all the time, we'd all be in a fetal position somewhere in a cave. We'd never be doing anything. Really. So coming back to our theme here, the average consumer can absolutely outperform senior economists working for the major banks simply by not listening to them. That's kind of what I'm going to say. And following on from that, before I bring Terry back in, it's, the press, it's exactly the same stuff. And you have heard me say this before, but you've got to pay attention, guys. What's printed, it's often presented as an expert opinion. It's often just somebody's press release. They are all in the business of getting your attention, and they are reactive to what's going on to make you click and keep coming back and clicking on more. You'll read news articles of somebody made $4 billion in one transaction, or $4 million in 10 minutes in property investing in real estate at the age of 60 and blah, blah, blah. They're trying to sell you this sort of what to me is an unachievable kind of dream out there, make you think it's achievable in really short periods of time without taking any risk, and they'll kind of scare you into never doing anything. And there's never any recourse. They don't print apology for misleading the entire nation that they're printing this garbage. You've got to ignore it. Don't listen to the scaremongering. Don't pay attention to someone's press release, or the constant focus on auction clearance rates. For example, in Adelaide, if you listen to them in Adelaide, there's like 4 auctions. Adelaide doesn't do auctions. And yet there's this great big focus on auction clearance rates. And Terry, where do we even,
Yeah, I mean, I just tell people constantly, you have to tune out all that media white noise. It's clickbait generation. People writing the articles and the headlines aren't real estate experts, and often the people they're quoting, the people whose press releases they're recycling, are not experts either. And many of them, much of it comes from economists who, as you've pointed out, have a very poor track record of forecasting. Probably they get it. They don't just get it wrong a little bit; they get it wrong a lot, constantly. And this year, again, they started this year forecasting prices would fall in 2023, maybe 12-15% across the board. And of course, what we've seen is prices have actually been rising in most markets, not booming, but rising moderately at different levels in different markets. But the degree and frequency with which they get it wrong, it amazes me that they keep their jobs. If I was running the major banks, I'd be sacking a few of them because they just...
like zero recourse, and then literally the next week you'll just see an article that completely refutes what they've just reported the week before, because there's been some fresh data source that that shows surging prices because something's happened in the last week at 0.2%, which brings us back to this short-term trend problem, because there's this need for constant news and constant content. So, every 5 minutes things are reported, and it's meaningless and insignificant to me, right?
Yeah. So it comes down to people actually having a strategy, having a team of good advisors around them, and just get on with it, tuning out all the media white noise. I have a strategy, and I'm going to implement it, and I don't care what the media is saying about what's going to happen next month with interest rates or who's going to win the next federal election, because it's irrelevant. I'm just going to get on with implementing my strategy based on the advice I'm getting from real experts.
Absolutely. And that was slide number 4, so we'll skip that one. Absolutely. And I guess concluding these kind of myths out there that interest rate rises cool the housing market. I don't need to say any more about that, do we? Because they started rising in May last year. They've obviously been on hold for a little while now, but the markets have not cooled. They've kept going for many other reasons. So myth, interest rate rises cool the housing market. They don't. Number 4, governments act in the best interests of the people who voted them in. My God, where do we even start there? Please also remember, your governments, they are also in business. They're in the business of being in government. It's their job. They will do whatever it takes to buy votes, garner favor, whether it's the right thing to do or not, whether it actually solves a problem or not. So right now, it's, the focus is very much on the rental crisis, on tenants. And when you look at percentages, there's I think I saw this, there was 3% of renters that rent through state and territory housing authorities, and over 90% of Australia's 3.1 million rental properties are financed by everyday mom and dad investors. They need us, but they've done nothing but alienate and really punish the average investor out there. Victoria, great example, introduction of land tax. Daniel Andrews single-handedly made Victoria a no-go zone for a lot of property investors. He's passing laws that are onerous to property owners. They've significantly increased the costs of ownership, stamp duty increases, like I said, land tax for certain types of properties. He was talking about bringing in a rental cap. I mean, all the states are, because they've got to be seen to be doing something, whether that's actually going to solve the problem or not, which we all know it won't. It's just going to make it worse. So, Brisbane City Council, Terry, you talked about this recently. They've increased the Airbnb rates increases. They've increased the costs to build property. We had Queensland's attempt at those land tax changes she was going on about last year. New South Wales, again, mandated design changes to builds. They've added, I think, 40 grand or something to the cost of building your average new home. Consumers are ultimately going to pay for that. So I suppose to sort of finalize that particular part, it's that don't be put off by fluctuations in government policies, right? But think about why they're doing it. Yes, they'll affect your costs and what you can and can't do, and whether that's right or wrong or solves the problem. Absolutely, those things are issues. But those people are going to come and go. Premiers with crazy ideas and zero brain for how the housing markets work and the economies work will come and go. They are politicians, but it's all about just staying in government. They're fickle, to me, a lot of the times unethical, generally a bit stupid, but driven by keeping themselves in government, not actually solving problems. So when, these land taxes, or when there's certain things coming in, don't let that put you off buying in a really solid, great growth area, is what I would say. Terry?
Well, yeah, I mean, the point you're making that politicians go, but real estate is long-term in nature. And I think that's the key thing in mind, that there will be short-term upheaval according to the policies of the politicians in power at any point in time. But
yes,
if you're taking a sensible approach to real estate, you've got to try and tune all that out and be mindful of the long-term nature that it,
yes.
If you've chosen good locations and bought good property based on good advice from people like Kate, then your property will perform over time.
So this is exactly what we're going to go on to say. So the key, ignore all that noise, all this stuff I've been talking about really for 2 slides only. Ignore the noise. Facts and figures are interesting. Absolutely. You need to do your research, but be aware of why these things are being printed. And it is not always fact. You have to tune it out and stick to your plan. You've got to have a plan. It's so important. Don't just sort of jump in on realestate.com and start looking around at what's out there. Have a solid plan around how much net worth and equity you need and when you want it by, how many properties you're going to need to get to that point to suit your risk profile. That's super important, and then of course, who's going to help you with this? The right professional help. Again, I can't stress enough how important that is, right from your mortgage broker, and they weren't all created equal, so somebody who can help you with your mortgage planning, who has experience with the investment property market. That is, again, it's just really, really important that they know what they're doing with investments. They're not just specialized in homeowners. Structuring your investment loans and how you do that, it's really important to get that right. You need an accountant, you need a great buyer's agent, obviously, great property investment advisor, somebody who can help you find locations. Obviously, Terry's reports are amazing, and someone who can help you kind of cut through that noise and focus on what is going to be an awesome location for growth, but also an awesome location for you. So finding that right location, I've talked about this before. It's really not rocket science. We come back to those questions right at the beginning with supply and demand. Why is the demand there? How long is it going to be there for? What is the supply of property going to be like? And how long for? So why is there demand? Why do people want to live there, make money, raise families, establish what makes a place desirable? Things like, and you read about this, in Hotspotting's reports. So things like the infrastructure of an area, obviously established infrastructure is really important to make sure that an area is thriving, but looking at what's going to happen in the future. So future spending on infrastructure projects and it being a project that delivers those growth drivers that will bring people in, that aren't just, there's growth, there's infrastructure spending and infrastructure spending. So you're looking at hospital expansions, road upgrades, schools being built, infrastructure that caters for a growing and thriving population. It's key. A knowledge of that kind of imminent infrastructure obviously can provide you with a really good opportunity to make an investment early on. Things like industry and the economics of an area. So, where do people work? Are there enough opportunities in a variety of industries? So you want a really good diversity of industries that people work in, not just a one-horse town, because if that one industry falls over, everyone's going to leave and go and work somewhere else. And you want that economy in that area to be really healthy. Obviously, you want people to have growing wages. You want them to stay in an area, spend their money in an area. So you've got diversity of industry and healthy economics. And then you've got population and demographics. So the number of people who are living there, ideally that's growing at a nice rate, ideally faster than national average. It's important from our demand perspective. Again, the more people that are moving into an area, the more the demand, obviously, for property. And then forecasting that kind of thing it's interesting. Doesn't mean it's actually going to happen, but looking at those trends of population growth. And then it's not just how many of them are there, but who are they? Who are these people that are moving to that area, and why? Where is that demand coming from? Who are you buying for in that area? Are they staying long-term, short-term? And again, of course, what kind of property do they want? What are they buying in that area? So all those things are on that demand side of the equation. And then you're looking obviously at supply. You're looking at the recent sales. How many are there? Is it consistent? Recent rentals, what are the vacancy rates? What housing and building approvals are coming into that area? Is there going to be an oversupply that is, oversupply, right? More supply than there is demand. And obviously, again, we want that, we want to get that balance right so that there is demand for that asset. So that's all just to do with the location, and you're finding the right property, and then, like I said, finding the right location, and you're finding the right property for those people who are going to be living there. And then above all of that is finding that right location and property for you. Now, I'm not obviously saying that you're not going to live there. You're not buying the property for you to live in. You're buying it for somebody else to live in, but the property investment that you make has to suit you and your risk profile in terms of obviously budget and cash flow outcome. So there's lots of different growth areas out there, but we need to pick one that's going to be right for you so that you can hold this asset for long enough for it to perform the way we want to over the years. So you don't have to sell it in a couple of years because you can't afford to hold that property. So you need to match all these things up so that you're buying what's right for you, what's right for the area, in an area that's going to grow in value. And all of that is, so what's your plan? How much are you spending? And can you hang on to that property long enough for it to grow in value? And again, to me, we're not overcomplicating it there. We're ignoring the noise. You've got a plan. You've got a great team around you. You're picking a good location with the help of things like the hotspotting reports and me. We're finding a great property that's in demand, and you hold on to it for long enough.
I think a really important point in what you're saying here, and I like to refer to the questions I'm constantly asked in a whole range of different forums. Questions like, where's the best place to buy in Perth, or where's the best place to buy in Australia? A lot of people seem to think there's a right answer to where's the best place to buy. And what I always answer, and it sounds sometimes like I'm being evasive, but I think it's absolutely correct to say, look, there is no one right answer. The answer depends on the individual. And you as a buyer's agent, you need to find out as much as you can about the circumstances of your client before you can answer the question for them, where should I be buying? Because there's a different answer for everybody.
Exactly. And that's what I mean. You know, there could be, you know, there's tens of, I don't know, pick, you know, 15 different growth areas. There's more, but pick 15 growth areas around Australia that are all going to have obviously different price points. They're all going to have different yields. They're going to be different property types. So, you know, for, you know, your $600,000, say in any of those areas, you're going to get an older property in one area, a newer property, a sort of medium property. There's going to be smaller blocks, larger blocks, this whole different array of property types that if you are cash flow sensitive, you are going to, it's not me, is it? You're not going to want an older property in a low yielding area. It's going to cost you money. You're going to be selling it, you know, within a couple of years, because it's going to cost you money to hold. So knowing, and that's why I put that, you know, obviously that's why I put that point right at the end. It's a great location and a great property in that location, but it has to be right for you. And what's right, you know, for me is going to be different for the other person on different income, different family setup, different goals, all these kind of things. So exactly, no one area. So a couple of things I thought I'd just throw in there. Things that I will guarantee is that the press will continue to print garbage. Economists will continue to make the wrong predictions. Governments will come and go. And not solve any actual problems. Interest rates are going to keep going up. At some point, they're going to come down again, and then they'll go back up again. They're going to fluctuate during the lifetime of you holding this property. World shattering events are going to keep happening. There could be another pandemic around the corner. Some other things are going to happen. And the press, they love it, you know, because it gives them weeks and days and hours of content with which to scare you. And the recurring theme here is that you have property bought in strategic locations with these long-term growth drivers, intrinsic growth drivers. With high demand and low supply, it will grow in value. I've never seen it not work. Okay. Got some little case studies to go through, some of which you may have seen before, some you may not. Sunshine Coast, Terry, you're right there. Australia's 10th largest inland city. I've put, so what I've done here, obviously a little map of where the area is. We have a little printout of a growth chart. So here, this blue line on all of these case studies is the median house price. These are they green? We're calling them green. This kind of green bar chart is the number of sales, but this is the growth, really. This is the growth of our median house price. And over here, we have obviously residential vacancy rates. So you can see trends really from last 13 years, 2010 onwards. So this particular suburb, what did I pick? Sippy Downs, has been a very steady performer over the years. Like I say, it's the sort of the city of the Sunshine Coast. It's a very large city. It's a big economy. It's a growing economy. It's a big economy. It's now a diversified economy, has been for a number of years. You've got significant investment in this region, lots of infrastructure projects already completed, some still happening. Oh God, I mean, where do you start? Airport upgrades, new CBD, you've got that huge medical precinct that's still being built. There's a lot happening there already, but it's a very stable area. You've got continuing population growth, which is coming from within, but also from interstate. Oh God, what's not to love, right? It's quite an opportune market as well at the moment, because you are looking at that median house price of 780,000. Again, depending on your property type, you're going to pay more than that for a newer property with some depreciation. But because, again, like I said earlier on, everyone's borrowing capacity has gone down. So these slightly higher priced markets are not quite as hot and rampant as your Perth and your Adelaide. So buying here at the moment is quite a different buying experience. Terry, anything to add?
Well, I'll go back to one of your key and central points at the beginning, and that is the simple concept of supply and demand. I think Sunshine Coast really is a great example of it, because in terms of demand, we have extraordinary price growth ongoing and unlikely to slow down anytime soon, but constant difficulty in this market of keeping up with that population growth, supplying new dwellings, and that puts upward pressure on prices. One of the things you can see from the graph there, just how much prices have risen, say the last 3 or 4 years on the Sunshine Coast, but it's leveled off a little bit. The Sunshine Coast had, say, 3 extraordinary years of price growth, past the peak. Right now is actually, I'd see as an opportunity, because the market is not as hot as it was, but long term it will continue to show very good growth because of that ongoing and future projected population growth. But, what we're seeing in the latest numbers on sales activity, which means buy demand, it's starting to rise again. So now it sort of feels like the beginning of the next upward surge for the Sunshine. Could be a time to get into that market before that really translates into another bit of prices.
Absolutely. And then in conjunction with that, you've got this chart over here, which shows your vacancy rates. This is 4%, this is 3%, and how steady and at or under 3% this has been over 13 years. And that's not insignificant, guys. You need a constant demand, obviously, for the rental property that you're going to be buying, and you have that here. We typically look at a vacancy rate at, say, 3% and under for, a relatively tight rental market. These things do fluctuate, obviously, for different reasons. Again, all comes down to supply and demand. But here you have a really consistent performer. On the growth chart, I also think it's interesting that, this sort of little bit of, obviously I had some growth here. It's always been a good suburb because you're not in tourist central, you're kind of back where normal people live, as I like to say. So there is less volatility in that market, but it's hasn't really gone backwards. It's been growing really steadily, and especially since they started to, like I say, diversify their industries away from just tourism, with the university, the police training college, that health, that enormous health precinct. You drive through there and it's mind-boggling. So there's lots of different industries that people are working in, and obviously that brings people in, it attracts people. You've got lifestyle, you've got the most gorgeous beaches, beautiful area, and people can work, raise families. It's no wonder, everyone's moving up there. Anyway, sorry, I could talk about the Sunshine Coast forever. Toowoomba, very, very similar. You'll note sort of similar charts with, most areas that I'm looking at have got this spike in median house prices since 2020. But you've got Australia's second largest inland city. Again, it's really basic stuff here, but it ticks all the boxes. You've got infrastructure development, you've got population growth, it's inclusion. Brisbane's Olympic bid, there's a couple of events happening there. Second range crossing, the inland rail link. You've got the benefits of it being near the Surat Basin, but not dependent on it. So it benefits from mining, but isn't relying on it. You've got agriculture, tourism, health, all these big industries. It's affordable, again, low vacancy rates, super low at the moment at 0.6%, and pretty good yields. Again, it depends on obviously your budget. Everyone's budget's coming down, like I said. So you've got a median house price of around 512. So for your sort of 5s to mid 5s, you are going to be looking at a slightly older property. So while the yield is still good, your cash flow outcome won't be as good as if you're buying a newer property that is more expensive. But pick your locations here. So Darling Heights is in that sort of southern southern part of Toowoomba. Great location near the uni. And again, what a very steady, consistent performer. There, to me, there is nothing wrong with that growth chart. Terry, right? I'd be very happy.
I'm a big fan of Toowoomba. It's been very high on our list of recommendations for a year or so now, but it's still there because I think it hasn't really even begun to realise its potential as a growth city and as a growth property market. There's more to come. They're spending over $1 billion on a new hospital. The inland link is yet to actually be felt because it's under construction, but when it's finished, Toowoomba is going to be the Queensland hub for this link from Melbourne to Brisbane. And they're now saying it's a $30 billion project. You know how the cost of installations, but it's incredibly influential, particularly taken in tandem with the new Wellcamp Airport. So those two things, which are located close together, lots of big businesses are establishing operations in that those western outskirts of Toowoomba, where the airport is and where the inland rail link hub is going to be. You know, international operations are actually setting up there. It's not Toowoomba's become a major player because of those pieces of transport infrastructure. So I think its potential is yet to be fully realised.
Exactly. So, and all of that stuff that we're talking about here, that's all, you know, the demand. So we know the demand is there, and the supply, there is supply in terms of new builds. It is kind of happening around that sort of Glenvale in that western side area. But, you know, if you're looking at the sort of middle and inner ring of Toowoomba, around sort of Darling Heights, Kearney Springs, Centenary Heights, all those, Harristown, those more inner suburbs, very established suburb, established infrastructure, you know, not as much supply, and the same as many of the markets that, you know, that have been doing so well over the last few months and year and a half, is there's been the absolute lack of supply of established housing, just listings, I mean, like sales listings, not just housing supply. So you really need to look at both those things of the coming supply of new housing, but also the listings that are on the market at the moment. And there hasn't been that much out there, and everything that is out there just gets snapped up. So, you know, it's really it's been supporting the growth that we've seen there. So yes, love Toowoomba, such a great long-term performer. Moving across to South Australia, which we've talked about again. Look at the growth chart, extremely steady, pretty, should we say, stagnant, sort of sideways, very gentle upward movement here, and then whoosh. So my gosh, and the vacancy rates, right? You've got to remember, this is 2% here. This is the 2% mark vacancy rate since 2010 at 2% or under. That is literally, you know, constant tenants, constant demand from tenants. You've got our infrastructure construction booms happening. There is so much going on I've got two arrows on that map, sorry guys. So that is the city of Salisbury, which is the lower one here, and then the city of Playford, which I also really like. And the reason I've kind of put two arrows there is that it very much, again, depends on you as the buyer as to the property types that you're buying there, because the two areas are quite different. But you know, when you look at the demand for property, you've got it ticks all those boxes: infrastructure, it's population growth. The demand is absolutely there. You've got rising rents, as we have in most great areas around the country. You've got reasonable yields. I'd say it's not as good as Playford, but pretty reasonable yields in Salisbury. Vacancy rates massively low. Like I said, you've got a really good opportunity here for entry-level investors. Those, although more and more, you know, those median prices are coming up at 505. I wouldn't have thought that possible 2 years ago. So it's very affordable, and you've got pretty good rental returns. In Playford, you're looking at better rental returns and a newer property type. So while the yields in Salisbury are still quite good, your cash flow outcome there isn't going to be as good as it is in Playford, because you're buying a newer property with depreciation. Obviously, it depends on your personal circumstances, but that's why this is important. So, and both areas, again, super popular. The demand is massive. Like you're going to be one of between 15 and 20 offers on any decent property there at the moment. There is a few more listings starting to come through, but they're just going, you know, it's hard to get a look in. But again, very solid growth charts, very stable area, really low vacancy rates. What's not to love, really, to me? Pretty good. And then back across the country to New South Wales, slightly different sort of proposition, and certainly in terms of median house price. Sorry, that's tiny. That's an $846,000 median house price at the moment. Again, very steady performer. You're very close to the new airport. So in terms of ticking the infrastructure box, this is about as big as it gets in terms of the billions of dollars being spent in the area. I've talked about it before. So have a look at Terry's reports on this area. It's huge. The population growth is huge. It outperforms the Sydney average, which is pretty lackluster, actually. Sydney tends to sort of lag a bit in population growth below the national average. In Penrith, even, and Liverpool area, which is kind of here, those figures are much healthier. And obviously that population growth is anticipated to just go through the roof. The vacancy rates are going to be a little bit up and down in these areas because of the level of supply that we're talking about. You've got a lot of greenfield sites that are out here towards kind of Austral, Leppington, and the stuff that's happening around the new airport. But it comes down again pretty quickly. And again, you're looking at really healthy long-term prospects in terms of growth drivers, and if you can afford it. But again, you're looking at what your budget is, the property type that you're buying for $850. It's an older 3-bedroom property, one of those lovely red brick things, you know, 3-bedroom property on a slightly larger block of land, but that is going to cost you money, right? Because it's going to rent. The yields aren't great. It's Sydney. So you really need to consider whether you can afford A, the purchase price, and B, the hold costs at the current interest rate environment. So again, it's not every area is for everyone. It's quite different. Sorry, mindful of the time. And then back across Armidale, WA. Gosh, so much to say here, really. This area, the growth chart here is, I've left this one last because it is different to our preceding, however, 4 areas that I've talked about, where we have that dip, which you will see in pretty much every Perth suburb growth chart over the last few years, that dip that we had after the sort of boom that there was in sort of 08, 09, and then GFC hit that state quite badly, where things went sideways, then down, and we're coming off a very low base in the last 2 to 3 years, but things are definitely moving. A lot of growth drivers in place. Population has increased here massively, 3 times the state average. That is of note. Great diversity in terms of industry. We have a very low median house price. Again, like with some of those Adelaide markets, that's why this area is so popular. And for that $350,000 or maybe $390,000 property, you're going to get $450 a week in rent. So your basic yield is really, really good. If you buy something newer, you're going to get depreciation on top of that. So your cash flow outcome is pretty good here. But you do need to be aware of, really, to me, an inherent volatility to some of these WA markets. It does happen. But to me, you know, it's a very solid area. Again, it's where normal people live and work in a big diversity of industries. It's affordable, really good transport links into town. And like I said, those cash flow outcomes are hard to ignore. And the vacancy rates have been, as you can see, you know, a bit up when it had that dip in sort of between sort of 16 and 2019, and we're currently at 0.4%, which is one of the lowest vacancy rates in the country. So you need to me, you need to know what you're getting into here, but it has really, really good opportunities over the next few years, I think. Terry.
Yeah, we're certainly recommended the city of a suburb of Armidale, and some people have reacted because it's down market, saying, "Well, and I heard want to live there," as
Really? Yeah, not that bad. Yeah.
But one of the television stations went out as a result of that report of ours and interviewed people who lived there, and they had a series of people who said, "Look, we moved here because it was affordable, but we actually love it because it's got everything we need. It's got shops, it's got schools. You can jump on the train to go to Central Perth really easily. It provides everything we need at a really affordable price, so we actually love it." And I think people need to keep that in mind. Down market doesn't matter if it provides everything that people need in their day-to-day needs, like shops and schools and public transport, and it's affordable. People are going to want to be there.
Agreed. Exactly. And that's demand, right? And at the moment, very little supply, massive scrummage for every decent listing. So that's why our prices are going up. So I just did one more slide quickly, where you are, if you'd have bought, let's say you've bought 4 properties in around the 2007 mark and held them for the last 15 years, and this is how much equity you would have gained. And it comes to about $1.6 million at prices that obviously back then, 460 back in 2007 for, say, Cranbourne North, which is southeast Melbourne, was quite a lot of money, and again, quite different property types in these 4 areas. So Mayfield is Newcastle, older properties, Corio and Geelong, older properties. If you'd have gone for Ballarat, Delacombe is in Ballarat, and Cranbourne North, they are much newer properties. So you've got a bit of a mix of property types there with different cash flow outcomes. But if you'd have done this, and kind of as a little disclaimer, really, try and ignore this little dip here in 2023. We're only halfway through, really. We're only just starting to see settlements that happened in August. So ignore any little dips there. Then there's $1.6 million in equity right there. So I don't think that's too bad an outcome.
And the key thing for me is that you're looking at had you bought in 2007, since 2007, we've had a GFC, we've had interest rates ups and downs, we've had changes of government, we've had all sorts of economic disruption. Tuning it all out and just
do that. Let's do that.
Faith in good solid real estate, and it will perform time.
Kate,
we need to
yes, we do. Go. Questions.
We'll finish with your call to action, but let's have some questions from people, and please do type your questions into the Q&A panel, and we'll answer as many as we can in the time we have available. We're speaking just a moment ago about a section of the Perth market, and Kate's asking about some of the northern suburbs of Perth.
Look, yes, I've really only picked Armidale because it's reflective of what's happening at the moment in terms of affordability, because of its median house price at 350. So you could go to the City of Stirling suburbs. I love it up there too. But again, it's going to come down to the property type that you are okay with and that you can afford to hold, because again, some of those properties are a little bit older, you're closer to the CBD, which in itself is not a growth driver, everyone. But you're possibly buying something a bit older on a larger block. The cash flow outcome is different. Or you head further north to the Joondalup sort of area, where you are paying more. I cannot pick the median house price off the top of my head, but you're paying quite a bit more up there, but it's a newer property, also a great area, heaps going on up there as well. So it's just one. I just picked it for illustrative purposes, but heaps more going on.
What thoughts about investing in Geelong and Victoria, particularly the fact that the Victorian state government has just increased land tax? Is it a time to exit Victoria, as some property investors are doing?
I'd probably get that person to just re-listen to everything that I've been talking about for the past 50 minutes. Don't be put off by that. There are really good opportunities at the moment in Victoria for exactly that reason. There aren't that many listings either. So yes, there is an opportune sort of moment at the moment, but don't think you're going to get a bargain. really, you'll still, because there aren't enough listings for that to happen yet. I haven't been put off by that. It doesn't stop growth drivers.
Cool. And Geelong is a particularly
great. Yeah. Well, goes back to here, Corio. Here, this is Geelong. It's right here. Well, yeah.
It's a lot of. It's one of those cities that have transitioned very successfully from the old economy to the new.
Absolutely.
Becomes strong.
Yeah, but again, a huge diversity of property types depending on your budget and suburb, right? So you can buy something much newer at higher prices. You can look at Corio, which is, you mentioned Corio to someone in Geelong, they'll probably look at you horrified, but look at that growth chart. But you're going to buy an older property, the yields are quite good. So you can, it's diverse, like a Toowoomba is, right? You've got your posh areas, you've got your less posh areas, your different property types with different cash flow outcomes. So you need to be mindful of where you're buying there. But there's actually very few no-go zones in Geelong. It's a great market. Yeah. But it's come off the boil a little bit. It's had quite the growth phase. And it does tend to have a little boom every now and then. Yeah, great area though.
Moving along, Sandy was asking, what about Townsville? Any thoughts on Townsville, Kate?
I'm often mindful of Townsville. I know that you love it. I think it has potential. I might hand Townsville over to you. But one thing I'm often mindful of in terms of when I come back to somebody's risk profile or their cash flow outcomes is you're paying a lot in insurance. You're paying very high rates there. So that can eat into your cash flow. But, and again, that's fine for some people. But Terry, I know you love Townsville. Go.
I love Townsville because it's a great example of what we've been talking about today. We're talking about focusing on places that have a decent sized population, that have strength and diversity in the economy, and Townsville has that in spades. Yeah. Growing population, lots of infrastructure spending, jobs being created, affordability, and really good rental yields. It's very easy to get 6% and above on houses in Townsville. So all of that is great about Townsville, but the point you made is valid, that you're going to be paying more for insurance because it's up in the tropical north cyclone zone, and insurance companies will charge you double the premiums for Townsville. So you've got to keep that in mind. It's a question about Marylands in New South Wales. Is that a place you're familiar with at all?
Yeah, absolutely. I mean, it's look, we could spend the next 3 hours talking about every suburb in Australia and its merits and its pros and cons, but really
you have 30 seconds on Maryland.
Stick to suburbs that have really good proximity to the new airport.
Okay, all right. How to find good brokers to get further loans, as borrowing capacity is very limited. I guess the question is how to find a good mortgage broker.
I don't want to alienate people here really, but I get a recommendation from someone else who has bought an investment property and had a really good experience with a broker is gold. Email me. I'm happy to give a great recommendation. I find that your smaller sized kind of broking firm is good because they have access to a big panel of lenders. They will have people who are experienced in investment lending. I can't stress enough how important that is. You might have bought your home off someone. They don't necessarily, honestly, I know it sounds simple, but they don't often have the experience, or they don't always have the experience to structure investment lending correctly. So find somebody who has experience in that field. Get recommendations, email me.
Okay. Janet's asking your views on Rockhampton and Bundaberg in central Queensland.
Terry, I'm going to bat that back to you, if that's all right. I don't have really a lot of experience buying in those markets.
They're both good places to consider. Regional Queensland abounds with good options that offer affordability, good rental yields, and prospects for growth, because there's a lot happening in the economy. Rockhampton and Bundaberg tick all those boxes, as do other places like Gladstone, Mackay, but I particularly like Toowoomba that you discussed earlier.
I'm going to ask you a question now. Is Gladstone back on your thumbs up list?
Gladstone's has a bit of a proviso in that it's got a reliance on the resources sector, so it has that extra element of risk, but it's nevertheless a very important regional city with an important export port, and what it's doing is broadening. There's serious investment in like alternative energy, for example, happening in Gladstone.
Yeah.
Very affordable. I think it's worth considering, definitely. There's a question here, and it's one that sort of rose in my mind on behalf of viewers and listeners when you were speaking earlier. You're talking about all the elements you need to know about, like population and jobs being created and supply and demand. And the question is, where do you get the information about that? How do you assess that? I suppose the short answer is talk to someone like yourself or someone like me.
I know.
For the average person, it's quite hard, isn't it?
Yeah, it is. There's a lot of different data sources to go to, but I think a really good starting point is your hotspotting report. It gives you insights into all of that stuff. It is. There's a reason I love Terry's reports. I buy Terry's. There's a reason I'm here with Terry. I rate your reports really highly. I think the information in them is invaluable to give people a heads up on all of those things: infrastructure, population, industries, economy. It is all in Terry's reports. You can dig deeper, of course. You can go to the Australian Bureau of Statistics for population figures. You can go to each council's website. They have links and information there about their own areas, what they're doing. But really, why? It's all in Terry's reports. You're going to have to trawl through all these different data sources to get essentially what is in those reports. I use Terry's reports.
Okay, thank you. But it is hard for people to gather all the information, and that's why we have a business, in fact.
Indeed.
Nizar is asking your thoughts about investing in units, and he's thinking in terms of shit.
Yeah, that's a really
Gold Coast, Parramatta. Look, we're starting to be more and more interested in apartments.
Definitely.
Making that choice. How do you feel about it?
Definitely, I completely agree. And to state the obvious, yet again, it's going to come down to area, right? So, but the fundamentals are that our family size in Australia is shrinking. There's a number of reasons for that, but there's a recent government study. I forget the name of it. I'm really sorry, but there was a recent government study that showed that the lone person household, they are forecasting to be the single biggest demographic segment to be growing in the next 5 to 10 years. And they don't want a 4-bedroom house, right? So mostly. So you're looking at shrinking family sizes. You are looking at affordability issues, blah, 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 blah. So apartments in the right location, I think, can be a really strategic move if you can afford the strata fees. Again, keep an eye on the cash flow for those things. If it's some enormous high-rise block with a lift, a pool, a gym, cash flow, that bleed you dry, and 5,000 other owners, I'd be mindful. But in theory, I'm very much on board in the right location where there's demand, high demand for that for a unit. Definitely, yes.
Okay. Now, as always happens with these webinars I do with Kate, we've run out of time. We've still got
so much to say.
We would invite people to fill out the feedback survey. But what I would like to say to people, if we haven't got to your question, do not despair. You can follow up and contact Kate. In the chat box, we have some of the contact details. And I'd urge you, if you've got questions you want to ask, or you're interested in partaking of the services that are available, it's on the screen now, kate@adviseable.com.au. There is a call to action, a special offer. If you could just briefly, Kate, tell us what that is.
It is a $500 discount off the final instalment from our standard investment property buyer service. And really, we always keep that open to family and friends of the hotspotting service, website, webinars. So,
okay. So please follow up, have a chat to Kate or a member of her team. On screen is how you can make contact if you've got questions that haven't been answered today, or you just generally like to have a chat about investment prospects and how Adviseable can help you become part of what we call the successful 1%. Those people who actually get beyond one property or two and go on and have sort of 5 or 6 or more properties. And it's achievable if you've got a strategy and you're willing to invest in good information and good advice, such as you will get by talking to Kate and her team at Adviseable. Kate, thank you. As always, very informative, very interesting. We always run out of time. There's always more to say, but we better call a halt because people probably need to get back to work.
Lives, things to do, properties to buy with any luck. Okay.
Okay, we'll do it again soon. Thanks everyone for your attendance and participation, and please do follow up with Kate at adviseable.com.au to learn a little bit more or to find out how they can help you with your strategy. Bye for now.